If you want to learn how to trade just like me, join the community, click the private Discord link, sign up through this membership level, and you will gain access to weekly group mentorship calls for free. Really not the video I wanted to be making. We saw the reclaim, confirmation of the 55, confirmation that we had not lost the neckline, confirming that this is your support. And then we saw breakthrough the 20 and the 200, meaning that we're back in this short and long-term uptrend. And so all we now need to see is confirmation of that as support to confirm this follow through and double bottom that we spoke of in yesterday's update. Unfortunately, we fell straight back underneath and closed below. This is the most awful signal that I'm seeing across a lot of cryptos right now. Why? Because what we're seeing is called an EMA repel. It's nothing that you want to see. I know it's not the video that you want to hear, but there's multiple examples on other cryptos, just like your H bar, where you can see this 55 almost crossed the 200. They failed to form a bullish cross. Look what happens afterwards. There's a risk of that happening right now if this wick rejection. Just made a video update. On VeChain, yes, it formed, but it must now hold. And there's potential. If it doesn't hold, it goes on a bearish case. The reason why I'm bringing you to the VeChain chart is because I'm going to show you some EMA repels. You see the 55 and the 200 almost crossing, and they didn't. We had already broken through. We were already in an uptrend. But as they didn't have this golden cross, you fall back underneath. Another breakout over here, where unfortunately the 55 and the 200 didn't cross, and we came back underneath. I know on the Quant chart, we're not talking about the 200 and the 55. But I'm showing you the EMA repel, everyone. Here's another example on H bar. About to cross over. Look, we broke out. We're in an uptrend. Just see the golden cross form where the 200 and the 55 crosses over. If it doesn't, it's called an EMA repel. You get the slingshot motion back underneath, and we go into a downtrend, unfortunately. And that is why this video is not the best for us holders over here, simply because we're seeing that EMA repel. We've had multiple breakouts, guys. We've had chances of breaking this 109 high. We should have, since this bullish signal that appeared down here with the potential double bottom forming, seen this actually being held as support in order to continue up to the higher up targets. And in doing so, you would have forced the cross. As you can see, if I hide the actual chart, it's very clear that we're getting the EMA repel. Two separate occasions, right there and there, it had its chances. Look on the chart. Right there, we were all the way up here. We had broken out. Same thing when this failed, we were above, and then we fell back underneath very swiftly, and with that invalidating the bullish cross. And so with that, you're forming this EMA repel. It's not the signal that I want to make and tell you guys. But again, I'm just a messenger. Couldn't care less what the chart is actually doing. Long term, I want this to go up. In the immediate short term, couldn't care less, because it's nowhere near the end goal. We know the end goal is going to eventually be met, maybe a year or two down the line. But in the immediate short term, we're going to get these moves to the downside like we are seeing right now. But understand, if this is truly bullish, then bearish patterns do get invalidated. That could mean we fall beneath this, but actually find support before this target. If this is truly bullish. If it's not truly bullish, we're going to go ahead and meet this target, guys. This target is actually slightly beneath, well, not only this golden pocket, but this golden pocket over here. So we've got some confluence with this new golden pocket that I just drawn with this older one over here. So we can see the specific target, and I did actually go through this with you guys, showing you the M pattern and W pattern in the last couple of video updates. It's just that as we were holding the support and above the golden pocket, and we would have reclaimed the 20 and the 200, we just need to confirm its support, and we would have seen the breaks to the upside eventually forcing across. But as we close back underneath, we're now seeing two separate occasions where the EMA repel has now formed over here, where we had broken out, fell back underneath, invalidating the cross, a breakout over here, falling back underneath, invalidating the cross. And with that, the go signal to the downside would be a daily candle close below the 55 moving average on the daily time frame, sitting at the exact price of 98.36 cents. So $98.36. We must see a candle close beneath that point in order to initiate this dump down to the M patterns target. Understand, as the golden pocket is slightly above, and if this is truly bullish, you might not go ahead and meet this target, and we have a scary dip where we come back down into this area, fail to meet the target, reclaiming these key levels, and eventually looking for continuation higher. I'm hoping that for everyone over here, of course, but there are risks now that, again, if we come down to there and we fail to reclaim it as support to go back on the bullish path, we could be coming back up into this purple box area of $94 and $100 as resistance to eventually continue lower. There's a big risk of that, and I've spoken about it in the past, between $70 and $80. But of course, while we are above this key area over here, there's of course chances that this does not actually happen. So what needs to happen if we do get down to here? It must of course reclaim it and confirm it as support. If we start to see sell signals over here, I'll be the first to let you guys know, and I'll say, guys, it's looking likely that we are going to see Quant falling back underneath, looking for a new low below this low towards $70 and $80. Not the video I wanted to make, as we saw some incredible signs over these past few days. But again, I'm just a messenger. Don't shoot the messenger. I'm just going to show you what the story is telling me. I'm just going to regurgitate it and tell you guys, not personally what I want. Don't personally care as well, because this is just in the immediate short term, and our long-term goals are, you know, very, very, very long way away. Are we above the previous all-time high? No. So this is just a moment where you just continue to DCA for the long term, as we are at really cheap prices in comparison to our all-time high, but also in comparison to where we believe Quant will end up at the bull market top. So yes, it's annoying. A nail has potentially gone into our tire and burst the tire in the short term, but of course we can fix that tire, put a new tire on the car, and eventually it will start running again and driving nice and smooth. So there's your nice analogy. Yeah, that's it from me today, guys. Don't forget on your way out to like, subscribe, comment, share, as only 10% of you guys are liking and 50% of you are not subscribed. If so, if you did actually subscribe, we'd be well past 7K. I think we're only 50 subs away. So let's get there as quick as we can before the end of this month. Hopefully we can actually break back above this as support. But it's all dependent on Bitcoin. And if Bitcoin wants to start dumping, then this is just going to continue, guys. And again, remember that the level that we need to see a daily candle close below is $98.36. I think what I'm going to do for you guys, because you know, I love Quant and the community itself, and you guys are the biggest on the channel. What I'm going to now do is make some videos on the weekend regarding on what is happening right now, because it is an emergency. There are warning signs right there, and I have to keep you guys updated. So make sure you do stay tuned for the videos coming on the weekend. I don't usually do it, but as we're in like this crossroads right now, then I'm going to have to make some videos for you guys over the next day or two, Saturday and Sunday. If we do reclaim this as support, and all we now need to see is a reclaim of, if this does hold a support, we now need to see a reclaim of this for the continuation higher. So if this is held, maybe I won't make a video because I've just explained that. But if we start to see the dumps, I'm definitely going to make a video for you guys tomorrow and the day after. Thank you guys so much for tuning in. Don't forget to like, subscribe, comment, share. I've got a discount promo code that will end at the end of this month. So if you want to take action, go over to my Twitter, links down below, private message me there for the discount promo code, which will apply on my ebook, course and mentorship. Cheers everyone. If any of you are interested in learning how to trade just like me, there's multiple options. Click this ebook. It covers all the strategies that I use in these YouTube updates, so you will have all the same skills. Covers the Japanese candlestick, chart patterns, support and resistance, why I use EMAs over trend lines, Fibonacci's, divergences, and again using these all together to profit using them. I've also got a discount on my course at the moment, which ends at the end of this month. So that's down to £100. You also gain free access to my Discord community for the next 3 months, where you can expect to be a part of 12 to 24 group mentorship calls. If you want something that's a bit more personalized to your needs, then join my one-to-one mentorship plan. You can choose 5 or 10 hours of my one-to-one help, and included will be the 3 months free in the community, as well as my 6-hour long video course.